Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. If you know me, if you've seen any of my videos, you know that I love talking about controversial topics. I love listening to the different sides, breaking down these ideas, perspectives, and unfolding the truth, especially with all the shadiness, all the stuff going on behind the scenes with central banks. And this video is no different. Are gold and silver in a bubble? That's what we're going to dive into in today's video. But before, I got to show you something. If you want to look fashionable, expressing your love for gold and silver, look no further. This is my merch store. We have so many different things at affordable prices. Link in the description. So, this article was from Yahoo Finance. I also found another one from SD Bullion, and there were several more, but to make this video, right, somewhat timely, I found the two that I wanted to break down. Do you really think that gold and silver are in an inflated bubble? And if you do, when do you think this bubble will pop? Because all bubbles will pop eventually. And what is it going to look like? What are going to be these situations? What's going to be at bay to really cause this? Is it going to be political, 2020 presidential election inflating it? The dollar, becoming more worthless every single year? What's it going to be? I would love to know. So asset bubbles are a repeating theme. In 2017, Bitcoin entered a bubble, driving prices from $10,000 to $19,000. As a lot of us know, we saw that, and the bubble was definitely going to pop. When it goes up, up, up like that, there's a huge chance it's going to crash. So the recent bubble in Tesla marked a rally from $70 to over $500 in less than 6 months, right? This stuff is not natural. If you want an asset, an investment to go up and stay higher, there has to be some sell-offs, some dips, some price corrections, right? That's actually healthy. You never want it to just go up. So that's overbought, that's oversold territory. It's a fake, it's a false price. Our work supports a bubble in gold and precious metals later in this decade. This article will explore the various aspects of a bubble and how one could prepare. So I like this because they're talking about, even if there isn't a bubble, there could be, and if there could be, you got to prepare. Being prepared is the most important thing as an investor. Your money's on the line. Your livelihood's is at bay, is in risk. So we got to be prepared for all angles, and that's why diversification is also so important. So 1, a disruptive force that triggers speculation. 2, a believable story that gains mass appeal. 3, widespread adoption and the fear of missing out. These are great points, and this is what you got to watch out for, right? This is why I say take the emotional attachment out of investing, because this is what gets people caught up. So disruptive forces. The internet fueled the 1990s dot-com bubble. Blockchain technology stoked Bitcoin, and the electric vehicle EV revolution triggered the recent bubble in Tesla. Next, I believe a global currency crisis could trigger a bubble in gold that sends prices to unthinkable levels. This is my main theory that I think will happen, right? I'm not too worried about some of the things that's happening. I'm more worried about this, right? The global currency, the pace of the US dollar, or the pace that it's going downwards. So governments around the world have made it clear they will continue to print money. Eventually, they will have no choice but to default and restructure their debt. A new monetary system, likely digital, will emerge, and I believe this will be the driving force behind the bubble in gold. I just made a video yesterday talking about this. I definitely think this is going to be the biggest player in the game, a force that you got to be careful with. So the velocity of money. Inflation and supply shortages will only get worse. In the latter phase of the monetary crisis, the velocity of money will increase sharply. Instead of hoarding currency, people will spend their dollars quickly, fearing widespread shortages and higher prices. It's almost like spend it quick while it still has value, right? And it's a very contradicting perspective, but that's what would literally be happening. It's what's happening right now, but at a much slower pace, right? What I can buy right now for $500 will be drastically different than what I can buy in 10 years for $500, just like 10 years ago, it was drastically different as well. The price, the value of the dollar decreases every single year, and what you can buy is only going to get smaller and less valuable. And that's a scary thought, especially at a rapid pace. I mean, it's hyperinflation. Physical bullion coins, finding quality bullion products could become difficult, partly because of the resource shortages, most likely because of demand shock. What is demand shock? That is when a rapid flux or influx in demand overwhelms supply for months or even years. Any supply that hits the market is quickly gobbled up, no matter how high the price. We are seeing some of this now. And that's definitely true. U.S. Mint sold out of American Eagles. Royal Canadian Mint shut down for 2 weeks. This is why we saw 20, 50, 100% premiums on some of these coins that were sold at spot price, but they're, and people were still buying them. It's crazy. You could go to your local coin shop, buy an American Eagle for $1 or $2 over spot price, and for some reason, people were paying $20 over spot price for the same coin online. This is something that scares me a lot of because it's new stackers that don't know the resources they have in front of them that are paying crazy prices, getting scammed, getting ripped off, and they don't even know it. So when to sell, we've talked about this a lot. You got to think about how you're going to sell, when you're going to sell, what you're going to sell, right? Keeping a safety net, a time frame, a number, saying I'm not going to sell anything less than $25 an ounce. Set that so you don't impulsively sell, right? Impulse buying and panic selling is real. So now they go into a little bit of how to prepare. You could see this chart. So there's a strategy, accumulation strategy. If you want to see this, this is definitely stuff we should look at. This is a whole different video, a whole separate video in itself. So I'm just kind of I'm gonna summarize over it. It's looking at long-term versus short-term approaches, having types of silver for both of those. So conclusion, I think gold will enter a bubble later this decade. It probably won't be until after 2024, so you have time to prepare. Consider physical metals and try to reduce stress. You may find our premium educational metals portfolio helpful. So, stress is a big thing. Keeping focus on why you started stacking. I always say this, get back to the basics, right? Why did you start stacking? Was it because you saw the potential in silver? Was it because you saw the metal, the content, the metal content? Was it because you wanted to transfer your hedge against inflation, transfer your money into something that holds its value? Was it because you saw the value of the dollar? You wanted to protect your financial future? What is it? All of these reasons are going to affect and reflect how you stack, right? So if you're more of an SHTF, prepper, you're going to be buying silver strictly for its metal content. The high premium silver, the pandas, you're not going to be buying that stuff because you're just looking at silver as silver. Other people could be looking at it from a different perspective. So it's very individual. So this one's talking about the gold and silver bubble, the future potential bubble. Gold bubble narratives in 2020 and a lagging silver bubble to follow. Silver is gold's little brother, so silver usually follows suit. Let's jump into this. So virtually every financial bubble ever eventually needed and reached a consistent mantra or narrative to help spur the mass of investors to follow suit and not feel contrarian crazy buying into it. It is for this reason we often see first-time bullion buyers prefer to purchase their bullion at spot prices rise as opposed to when spot prices underlying bullion value falls. And this is what I always talk about on this channel. It's supposed to be buy low, sell high. For some reason, most people buy high and then sell it when it's low after it crashes. This is something that I see time and time again. When silver gains more attraction, more attention, it's more popular as the price rises, everyone starts talking about it. So then, as everyone's talking about it, more people start buying it. But you got to remember, people are talking about it because the price is rising. So the price is exploding, so you're paying a higher price. You want to buy it, you want to buy into an investment when nobody's talking about it, because that's when the prices are low You can get in then, and then when everyone's talking about it, that's when you sell. When most people are buying, you should be selling. When most people are selling, you should be buying. People didn't like $15 silver. They didn't like that at all. They were scared it's going to go to $10. It's going to go to $5, right? You cannot have that fear. You got to understand silver's true value and look past all of the distractions. So anyways, with investing or in speculations, one would likely prefer to acquire their asset and cost low basis at lower prices. And therefore falling prices should be perhaps attractive to contrarian or value investors. And that's what I was just talking about. The lower the price, the better, right? You can get more silver for that. It's like going to the store. If you're going to the store and saw a pair of shoes you wanted, and the shoes were on discount or they were on sale, wouldn't you be happy? You wouldn't want to buy the shoes when they were the most expensive ever, but that's what people do. They go to the store and they're happy to buy the shoes when they're the most expensive, but if the shoes are on discount, they don't want them. That's fear. That's not having faith in the markets. You got to understand the bigger picture. So there is a video attached to this. I didn't get a chance to watch it, but it does kind of narrate. It kind of summarizes what's going on. But they're just talking about the 2020 bubble in silver and what it would look like, and especially for the future, right? So I like this part right here because it talk about silver is likely to outperform gold. A silver bubble perhaps many multiple years later, and also moving to unprecedented and nominal US dollar term highs. Of course, if the underlying fiat currency enumerating all of these narratives goes really wrong, you most likely will not want to be trading much bullion for fiat currency at all. That's what I always talk about. People are investing for the wrong reasons. If you're investing to get rich, if you're investing to make a quick dollar, using your profits to go back into fiat currency, you're kind of doing it backwards. You're supposed to, I guess I can't say you're supposed to because I can't tell you how to stack or invest, but what the smartest, most logical thing to do would be transferring your weakening dollar into something that is valuable, that is money. So if you do that and then you get rich or make a lot of money off gold and silver, don't cash it out back to the thing that you traded for in the first place. What sense would that make to have all this gold and silver that's worth a lot, that's valuable, to then cash out back to a dollar that's weakening every single day, right? So anyways, so rather than get into messy and complex details at who or what a bubble or silver bubble might look like in terms of the future valuations and or historic monetary values, we simply want to leave you with many of the sound factual points Rosenberg illustrates in this interview. So gold versus interest rates, right? As low interest or as real interest rates have gotten, they are going to go even lower. Over 30% of the global investment grade bond market is negative real interest yielding. Over 16 trillion in negative interest rate yielding bonds. So, and that's going to continue over the next year or two into the 2020-2021. So various major fiat currency denominated gold prices are already hitting new nominal record highs. And this is stuff, $3,000 gold isn't a question with simple logic, right? All of these things it's not a conspiracy. It's not, don't get out your tinfoil hats. It's just happening. And some is sooner, some is later. If you cannot step back and see the bigger picture, then you're going to be caught up in the everyday short-term news, and you're going to make emotional, irrational decisions. There's so much going on. There's so many things happening in the world every day. Sometimes we got to take a step back and just look at it for what it is. We can so easily get caught up in the day-to-day stuff, and it really does, it defects us from our investing. We got to step back and look at the picture for what it is. So the next quantitative easing is basically government debt monetization, which currently goes by modern monetary theory. So helicopter money is coming, and that's what we're seeing, right? Trying to keep the economy afloat by just throwing money on this Band-Aid, right? But we have a deep wound, and a Band-Aid's not going to cut it. So silver, in order for it to move into a silver bubble in this coming phase, silver prices are going to have to reach some really historic silver price levels to be considered a financial bubble. And that's true. Silver at $26 is around half of its all-time high, so that's nowhere near bubble. That's just silver doing what it does compared to gold prices. But in the future, when silver markets go beyond what gold does when silver breaks through in its own category from industrial uses where gold doesn't even have a chance at. Gold is a monetary metal, silver is an industrial and monetary metal. That's where we could see some new numbers, right? And I'm always curious, take away stock market, volatility, take away dollar index, take away all that stuff and simply go off supply and demand, and then tell me what silver's true value is. It's unknown. It's never happened, but it will eventually. You got to see the bigger picture. You got to play the tape through. So anyways, I'm going to wrap this video up here. If you thought this video was educational, informational, or at least just entertaining, make sure to smash the like button. I'm sorry if this video was a little crazy. It's late at night. I wanted to get this video out tonight because if not, I would have thought about it all night and drove myself crazy. I love this stuff. I love thinking about this stuff. I love breaking it down and sharing it with you guys and gals. So thank you so much. Make sure to smash the like button. Check out my merch store. If you want to look fashionable, expressing your love for gold and silver, look no further, right? Anyways, thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.